This is the Sunday Business Page with John Delano.
Good morning, I'm John Delano. Welcome to another edition of the Sunday Business Page. And our very special guest today is Shana Bielich, who is Vice President at Coghill Investment Strategies. And Shana, welcome. It's so good to have you on the show today.
Thank you, John. Thanks for having me.
I really wanted you on because this stock market is driving a lot of folks crazy. The fact is, since the high point at the very beginning of the year, most Americans with money in the stock market, in 401ks or IRAs, retirement funds, they might have lost as much as 20% of their money this year alone. And that's a lot of money. If you got 50,000 bucks in the market, you've lost $10,000. So Shana, tell us, how long is this craziness on Wall Street going to last?
Well, John, I wish I had that crystal ball and could depict exactly when things will end. But what we can do is look back to history to see that we've been through periods like this before. I get it. It is unsettling. And we really haven't seen much of this in the last 3 years. We did see it with the pandemic in March of 2020. But remember, that was very short-lived. It was the quickest recession, quickest recovery on record. So it's oftentimes that investors have forgotten about that period. And this volatility is unfortunately sticking with us a little bit longer. And while we can't predict bottom, I do think that we may be nearing the end, but that's not to say that there might not be some additional volatile days ahead.
So it's quite possible that we could all lose more money if we take a moment and look at the value of our retirement funds or our IRAs at the moment. So the end is not in sight, or is it in sight?
Well, normally what we're seeing right now is, and we look back to history to help us see things a bit more clearly, is that it often gets a little more volatile before we hit that bottom. And the reason for that is because you have a lot of the hedge funds out there that have invested in maybe some of those high-flying stocks. And what those hedge funds are faced with is having to get out of their position, which causes them to sell. That's accelerating what we're seeing right now. So when we see indications like that in the market, that could tell us that bottom is nearing the end. We're getting closer, I would believe.
So is there anything we should do? I know traditionally folks in your business just say, hold tight, it's a roller coaster, don't do anything. Is that your advice still for most Americans?
For most, yes. I mean, we do believe if you are properly asset allocated, you have the right mix based on your risk tolerance and your age to stocks and bonds, really what you need to do is hang tight and stay the course. The reason we say that is because getting out now, where we are hoping that we're at the bottom or close to it, getting out now means that you've ridden the bottom and you've locked in those losses. And then the most difficult, challenging part, John, is knowing when to get back in. Again, looking back in history, we can see how quickly markets really turn themselves upside down, where we're looking at a negative year on record, and then the following year is positive double digits. Oftentimes, the biggest up days do follow the biggest down days or months, quarters, or years.
So we can be hopeful that after this horrible experience of the last number of months, we might see some real shooting up of our stocks and bonds and everything for that matter. We've got about 30 seconds left, Shana. I guess the bottom line, are you optimistic that we're going to get out of this before the end of the year?
I'd like to think so, John. I mean, a lot can happen. We still have, inflation fears. Is the economy contracting or slowing or growing? It's really difficult to say, but I do think that we will get out of this, hopefully by the end of the year. The good news is we're seeing some light of day with bonds. If you look at how bonds have performed for those fixed income or conservative investors, bonds are performing fairly well these last couple of days. So that's some good news.
Well, Shana Bielich, a certified financial planner, thank you so much for spending time with us this morning. I really appreciate it.
Thank you, John.
And thank you for watching this edition of the Sunday Business Page. Have a great Sunday, everybody.